Okay. Good morning. Thank you very much for your attendance. Saturday morning, 9 a.m. credit boosting webinars. I do these, once this month, twice a month. So just educating people on how credit plays into the mortgage world so people can have a better understanding. Some of the common sense type of things in the credit world don't really apply as readily or as easily in the mortgage world. So I like to lean into my years of experience. I spent over 20 years in the mortgage world, specializing in getting people in awkward situations across the finish line. So those skill sets tend to translate quite well in what I do now, which is connect people with down payment assistance programs and grants across the country so people can purchase with just a few $1,000s out of pocket. So today we're going to go over, you know, what the industry is like, okay? The mortgage world. Where do the credit scores come from? How do they apply? What are the industry standards in the mortgage world? And what can we do to maybe manipulate scores to get a quick spike? So I'm going to go over my steps, what I typically do, and I'm going to give you a lot of tools that are out there to help you get a quick spike in your scores. So with that being said, try to keep this to about 50 minutes. I realize it is Saturday morning. I am somewhat hopeful for a beautiful day out there, although somewhat jam-packed for myself, but that's a good thing. But with that being said, let's just jump right in. So who today is designed for is people with credit scores predominantly in that 5 to 600 area. Okay, we're going to teach you how you can get a quick spike in your score, 60 points in 60 days, or if you have no credit scores, or sometimes if you have some isolated things that might be holding you back, like bankruptcies, repossessions, collections, or significant late payments, or just anyone who wants to understand the mortgage industry and some of the credit hurdles that are presented in the industry. Yeah, so that being said, let's jump right into it. Okay, so why do I do this? Well, there's a lot of misinformation out there, especially in the rental market with regards to what credit scores to use, what not to use. I mean, most people run to the defaults like Credit Karma, Credit Sesame, and think that those credit scores are it. They are not. There are literally hundreds of scoring models out there. In the mortgage world, they traditionally rely on the FICO scores. And there are a lot of scoring models in the FICO scores, but the mortgage world is typically scoring models FICO 2, 3, 4, 5, and then 8, 9. And someone told me 10 is now becoming a thing too. So not all of the FICO scoring models are ones that are used in the mortgage world. So keep that in mind. There's also a lot of misinformation out there with regards to how to fix your credit. And there's no shortage of companies willing to charge you to do it too. And I would tell you right now, the way AI is leaning into every portion of our life, it's almost foolish to pay anybody to repair your credit. A lot of these things you can do on your own. Just ask the different platforms, Gemini, GPT, or Claude, and they can assist you. So, and I find that a lot of people are even overpaying for a lot of these credit repair items, and a lot of people are starting to actually lean into some of the credit. They call them network restoration, but the consolidation companies are surfacing now. And I will tell you, more than 90% of those consolidation companies, in my mind, are an absolute ripoff. So please, if you are thinking of doing debt consolidation, think twice, do your research, and make sure it is a good quality company. Most of them are just like most companies out there. They're just trying to separate you from your money, and what you get for your money is minimal in that industry. So by the end of today, you should be able to get your credit scores up 60 points in 60 days, in addition to identifying areas on your credit that are ripe for a quick impact and a quick spike in your score, and will help you add new credit if needed. And we'll also give you some timelines. How long will each one of these things take to hit your credit, and how big of a bounce will you get from doing it? So, because I'm all about setting successful timelines. So next thing. All right, the industry. So There's actually more than 3 credit bureaus out there right now, but the 3 big boys are TransUnion, Equifax, and Experian. Okay. Ideally, the credit bureaus have scores and scoring models, which are basically algorithms that are going to create credit scores anywhere between 300 to 850. In the mortgage world, at least the area that I specialize in, we focus on the middle credit scores. Okay. So each one is going to present a credit score based on what's being reported to them. Now, most creditors do not report your information to all 3 credit bureaus. Okay. Most creditors, they have to pay to report your information. So typically they're only going to report to 1 or 2 of them. Okay. There are some instances where they will report to all 3. For example, mortgages, some of the credit repair tools will do it, and some credit unions actually might report to all 3. But for the most part, a lot of creditors only report to 2 of the 3. So when we look at those 3 credit scores, we are always looking for the middle credit score. There are some programs out there that will average or blend them and things like that. They're not really in favor right now. Most of the programs that I work with, they're going to pick that middle credit score. So if you have a credit score that is, let's say, a 550, a 620, and a 700, they're just going to take that 620. They do not average them. Okay, so it's important that we get 2 of your scores in the strike zone for whatever program we're trying to assist or help you get approved for. Okay. Ideally, we want to see your credit scores in the 600 to 640 area on the FICO scoring models 2, 3, 4, 5, or 8, 9, 10. Okay. Most creditors, like I said, will only report to 1 or 2 of the 3 bureaus. When you are looking at it, it's key that when you look at what's on your credit report, I'm always looking to isolate quick opportunities with that middle and highest score. Okay. What's on the lowest score typically doesn't matter unless it's a big thing, repossession, collection, stuff like that. So, but for the most part, when it comes to the scores, we're going to focus on your highest and your middle and make sure those are in the strike zone. So it doesn't matter if your lowest scores at a 500. If we need a 620 and your 2 other scores are 620 or higher, we're good. Okay. Now, what goes into the credit scoring models? 35% of what goes into the scoring algorithms to generate your credit score is based on your payment history. So if your payment history has any recent late payments, that's going to hit you hard. Okay. And that's one of the hardest things that we run into right now. Any recent late payments on credit reports is becoming a very big challenge with some of the creditors out there. So we need to address them. It's not crazy to actually call the creditors. Okay, I had a young lady 2 months ago that had a 60-day late with Toyota. She just called Toyota. Now, they didn't remove the 60-day late, but they reduced it from a 60-day late because it was an isolated incident. They reduced it from a 60-day late to a 30-day late. And it was just an isolated thing on her credit. So we were able to get her approved since it wasn't a chronic or habitual late payment issue. Okay, so calling the creditors is not that crazy. Now, the step is when you call the creditors, their first line of defense is usually going to be no. They've got a phone jockey that's going to say, sorry, Mr. Collins, but we can't just remove things from your credit report. So at that point in time, you just go, you know what? Thank you very much for your information. Can I please speak with a supervisor? So typically you need to get to that second layer. You need to get past that first initial contact because they are conditioned to tell you that it is not possible when it actually is. Okay. Now, the other thing is if you have collection accounts on your credit report, do not blindly pay them off thinking that it's going to bump your credit. Okay. And I go over this a couple of times today. If you have collection accounts, please do not pay them off without thinking twice. If it's a collection over 2 years, do not pay them. Okay, point blank. You will reactivate them. So if I've got let's say I didn't return a cable box from 2 years ago and they have a a $200 collection account showing up on my credit report. If I paid them off today, next month it's going to show up July 2026, collection paid with whatever cable company. It's going to drop my scores. So we do not want to blindly pay off collection accounts and reactivate it where it actually drops your scores. These are one of the myths that people fall for. They think that if I pay off all my old collections, my scores are going to go up. No, not necessarily. If it's a recent collection within the past couple of months and you pay it off, yes, that can go up. But most of the time, it's not the case. So 35% of what goes into the payments or the credit score algorithms is based on payment history. 30% is based on credit utilization. And utilization is just the amount that you owe on an open or revolving line of credit in relationship to where the limit is. So if you have a $1,000 line of credit and you owe $500, that's a 50% utilization. Ideally, we want to keep that utilization below 30%. That's the optimal point. If you can get it down lower, that's great, but it doesn't really help you nearly as much. So I always tell people, just pay as many cards as you can down below 30% and you'll get a bigger spike. So if you have the opportunity or resources to pay things down, don't pay them down to zero. Leave a slight balance. I find that people are getting a little bit better lift by having a $10 balance on a card versus a zero. And right now, paying down credit cards is giving the bigger bang for the buck. Right now, credit card default, and this is just my opinion, but we are seeing credit card default rates skyrocket in the country right now. So if you have the ability to pay your credit cards down in an environment where some people are falling behind, I'm finding people are getting a better lift on their credit scores by manipulating their credit utilization. Okay. And if you are tight for money right now, which I don't know what your household is like, mine is always tight for money. So there are ways to time this. It's kind of an advanced maneuver. Go out on your credit report. See what accounts are available or what your balances are and what date it gets reported, and pay it off a week before it's reporting. That way, if you need to use it, the credit card again for groceries or whatever, it's out there. So it's kind of an advanced maneuver to manipulate things, but it can be done. So I always tell people, schedule a call with me. Happy to coach you through that. When you call me, make sure you have your credit card statements, and we are looking for when your credit cards close for the month. That's typically about when they report the data to the credit bureau. So if we paid your credit cards down a week before that, you'll see a quick spike in your score. That data gets reported. Then if you need to charge some groceries a week later and charge it back up, you can. Okay, so that's just a kind of little technique that we teach people to try and get that quick spike. So like I said, 30% of the utilization, or 30% of what goes into your credit score based on utilization. Credit history is big. Okay, credit history actually accounts for 15%. So the three biggest things are history, utilization, and payment history, utilization, and length of credit history. So do not close old accounts. You have accounts that just pop up on your credit report and you forgot about them. Don't close them and think that you're going to see a bounce in your credit. It doesn't work that way. In fact, if you have a thin credit profile, and a thin credit profile is just somebody that doesn't have a lot of lines of credit on their credit report. Suppose you've just got a credit card and an auto loan, and your auto loan only has a few payments left. I get people that sometimes think, oh, I'm going to pay my auto loan off. I've only got 3 payments left. I'll prematurely pay it off and my scores will shoot up. No, your scores will actually go down, because by paying that off, you're losing an active trade line on a thin credit profile. Doesn't help you. Okay, so just be aware of that. There are a few other things that'll go into your credit scores: frequency of new credit and types of credit used. So frequency of new credit is just how often you're opening new credit. If you're applying for a bunch of credit cards at once, that could hurt you. Okay, that's frequency of new credit. Types of credit. So credit diversity. is another thing where you can get a bounce. So if you have a couple of credit cards, an auto loan, a personal line of credit, that's 3 different worlds of credit or 3 different types of trade lines. That diversity will give you a little lift too. Okay, next topic. How to handle some of the big things that people wrestle with. Right now, student loans are a big issue. So student loans were taken out of forbearance, last summer. So if you did not make payment arrangements on it, they could be showing up as in default right now. So there's 4 types of statuses that there's actually 5. If you're in payment reterms, repayment area, that's 1. You also have deferred payments, which means you're still in school and your interest and not your interest, but your payments are being deferred until you pull it out. There's forbearance, which is what we were during, after COVID, where they just took everybody's student loans, kind of put them in forbearance and didn't have to make any payments on it. There was also, right now we're running into a fair amount of people that are in default. They didn't do anything with the student loans after they came out of forbearance, so people were put into default. Now, if you are in default, that's not a terrible thing. We can flip that pretty easily. So right now, I have people that are in default showing their haven't been making their payments. Maybe their credit scores are in the mid 500s. If they call the student loan servicing company and just say, "Hey, I want to pull my loans. I see they're in default. I want to start making payments. Can you possibly put me on the forgiveness program?" Basically what that is, or it's a fresh start program. What they do is that if you make 3 payments on time, they will move it from default to paid as agreed. So imagine something as a negative on your credit report all of a sudden shows up as a positive after 90 days. I've seen credit scores go up 100 points if they have a thin credit profile, because now you're taking a negative off your credit and turning it into a positive. Okay. So the other issue is, as you're pulling them out of default, a lot of these servicing companies are tempted to put you on a income-based repayment plan, which is good. But when they do it, if your income's low, they're not doing any payments at all. So you might say 0 payments on that income payment replan. So that being the case, that's not going to work for us getting a mortgage in the future or getting any of the down payment assistance programs or grants I help connect people with. So what we want to do is, hey, thank you for the option, and I like the income-based repayment plan, but can you please sign mine up at $10 or $20 a month? I'm just tired of I'm just tired of watching the interest clock increase and my balance go up. So, and the reason we want to do that is if they do 0 payments because you're on an income payment plan, your balance is going up every month, but the mortgage world and getting the financing won't accept that. Okay. What they'll do is they'll take the balance and take a 0.5%, which could be a big number if you've got a big student loan balance. But let's just say I had someone last month that had $200,000 in student loans. So if they take a 0.5% of that, that's $1,000 payment a month. They couldn't qualify for anything. But what we did do is we got an income-based repayment plan for $20 a month. And now the banks will use that to qualify versus that $1,000. That's the reason we want to push them for that. So someone's asking, can student loans be erased? Not easy. Okay. Student loans cannot be erased with a bankruptcy. It is a federal debt. Now, there are programs that were in place where if you worked for a nonprofit or a government agency or so public sector, then you could very well have them expunged after 10 years. So, but the feds are trying to pull that, and I think they may have on some levels. They're making it certainly a lot more challenging. So, but I do hear of people that are in low income situations that have had some success doing that. So, and I'm just not sure of the path on that. So the next topic, the big one that we run into, repossessions. If you have any repossessions showing up on your credit, They are being more forgiving with repossessions lately. So if it's an isolated incident, they're more forgiving. So if you co-signed a car for a family member and they didn't make the payments and the car was repossessed, but that's the only blemish on your credit, they're becoming more tolerant of that and more forgiving. They understand the situation. If it's the car, your own personal car, that's a different topic. So there's a couple of different things that we can do. If it's a low balance and you can pay it off, obviously that's the easiest. Sometimes I tell people it might be worth reestablishing payment terms for the short term, get you through on the down payment assistance programs and grants. And then what you do after we get you in the house, that's 100% up to you. No judgment there. There's nothing, I have no allegiance to the automotive finance world. I feel like some of those automotive finance companies are predatory at best. So some of the interest rates that they toss out to people are just, they're loan sharks. So, but there are certain ways to handle repossessions depending upon how old they are. So I always encourage people, schedule a call with me. Happy to go over those situations. In fact, let me get a, here, let me put this in the chat box. There's a link to my calendar so you can schedule a call with me. Always happy to go over your situation and give you my input with regards to how to handle things on your credit report. Now, after bank repossessions, there's bankruptcies. There's actually two types of bankruptcies. Number one is a Chapter 7. That's where you wipe the slate clean. If you ever have the option, choose that one. Okay. Every now and then, people talk about, oh, the honorable thing is to try and repay them. Kind of hogwash in my mind. Your personal life is like a business. If you get an opportunity to do a Chapter 7 or a 13, choose the 7. Wipe your slate clean. Chapter 13 is such a long, painful road for people. Many of them fail. Okay. So a Chapter 7 wipes the slate clean. Chapter 13, they take all your debts, negotiate the balances down, and you pay that trustee back over time. Typically, 5-6 years. It's a long time, and it's a long road and some big payments. Okay. Now, if you did do a Chapter 7, we've got to wait 2 years after the discharge date to get you financed in the mortgage world. It is important that we build credit as soon as possible. And it's actually fairly easy to do. Once you do a Chapter 13, you will actually start receiving credit card offers in the mail because they know you can't do it for another 7 or 10 years. So that being the case, take them up on it. Open up a couple of cards. The quicker you reestablish your credit, the quicker your scores are going to skyrocket. It is very easy to rebuild your credit after a Chapter 13. Auto loans, credit cards, you name it. Okay. Don't go hog wild with it. Just get a couple. It's very easy to rebuild, get those scores up in the 700s 1 year after a bankruptcy. The issue that we run into is the algorithms that generate your credit scores are very, very smart. In fact, if you have any late payments after a bankruptcy, they are going to hit you even harder. Reason being, they know you went through a bankruptcy. They know you got that pass. So it's important that you're not late after a bankruptcy. Chapter 13s, we can actually get you financed while you're in a Chapter 13, as long as you've made 12 payments on time to the trustee. So it's important that you try to build credit while you're in the Chapter 13. That's a little bit more challenging because part of the Chapter 13 agreement is that you're not going to take on new debt while you're in the Chapter 13. But if you find a way to do that, maybe with the secured cards are what I tell people, because technically you're not taking on new debt. You're putting money up for a debt and borrowing against money that you have on deposit. So that's the kind of workaround there. You do have to get your trustee's approval in order to purchase. I've always been successful with that. I've only had one trustee push back, and we did get it done. After your Chapter 13 is done and your Chapter 7, you do have to wait 2 years. So again, not fair the way they handle Chapter 13s that way. And then the last item, collections. Okay, so if you have collections on your credit report, if it's over 2 years old, please leave them alone. I always tell people, let's get your credit score up where it needs to be, get you approved for whatever product you're looking to get into from a financing standpoint. And then if part of the approval terms are to pay off those collections, we can do it at that time. What's nice about that is we've already got your approval, subject to paying off a collection account. Your scores are locked in at that point. Okay, once your credit scores are where that we need them to be, we can work with that credit report for 90 to 120 days. So if part of the approval is to pay that credit collection account off and the scores go down, it doesn't really matter. Okay. The other thing is, if we do that in that order, you can actually negotiate the balances down on those collections with more confidence. Okay. If your collection accounts are less than 2 years old, it's a case-by-case basis. Medical stuff, leave that alone. Okay. I find that anything below $600 should not be showing up on your credit. First of all, but if it is over, still leave it there. We can negotiate those on a case-by-case basis. If the collection is 1 to 2 years old, actually more like 6 months to 2 years old, we're probably going to want to run those through a simulator, find the best way to tackle those. Many times it might be just leaving them. If it's the collection account's fresh, like 0 to 6 months old, it might be worthwhile paying that off, and your scores might get a lift out of that. Okay. Next thing, my steps. Okay, here are my steps when I look at the credit report. First thing we want to do is we want to get a copy of your credit report. Go out to annualcreditreport.com. That's annualcreditreport.com. They will give you free credit reports once a year for all 3 credit bureaus: TRW, TransUnion, Equifax. Now, if it gives you an option to buy your FICO scores, because they don't give them away for free, do it. It might be $10 a piece or $30 total. Great way to do it. You'll know exactly what you're dealing with then. Okay. We want to determine what 2 credit scores are the highest. Focus on the middle and the higher one, like we talked about before, and figure out what we can do to get a quick bounce in your score. Okay. Are your scores low because of late payments, collections, credit utilization? We want to figure out what's dragging those scores down and figure out what we can do to combat that. Okay. We want to analyze your open trade lines. We want to make sure you have at least 2 or 3 trade lines on your account. And that's a trade line is just a line of credit. It can be new or it can be old. Now, if you don't have enough trade lines, we can add trade lines to your credit. They're called alternative trade lines, and I'm going to go over those in a few moments. Now, if you're in an awkward situation, we can run your credit through a credit simulator to give you some great options as far as what you can do to get that quick spike in your scores too. But just paying down your utilization, maybe picking up a couple of trade lines if you need it, those are very predictable things that we can do too. So we also want to analyze, do we need to add new credit like secured cards, secured loans, or become an authorized user on someone's account? I'm going to go over those in a little bit more detail in a moment. And if your credit scores are, below a 520, we may want to send some dispute letters out. I have people now that are taking their free credit report from annualcreditreport.com and they're uploading it to artificial intelligence. Claude, ChatGPT, Gemini, uploading their credit report and saying, hey, analyze my credit. Tell me how to challenge anything negative on there that shouldn't be there. Ask it it'll actually write the letters for you and tell you what document to send in with the letters so you can actually be your own credit repair person. So artificial intelligence is just, in my mind, is going to wipe out the credit repair industry. So, all right. So these are the do's. We want to get your credit report. We want to sign up for credit monitoring services. Credit Karma is the big one. If you can't get onto Credit Karma, Credit Sesame and Experian, they do good jobs too. I do work with a couple of lenders that can pull your credit and run your credit through a simulator. Always happy to make those connections for you. They do that service for free. They will help coach you along with me. Okay. If you're not technologically savvy, reach out to me, schedule that call. I'll connect you with someone that will do it. In fact, there's one lender I work with, Guild Mortgage, that if you pay, they have a credit tool or a credit process where if you sign up with them, they charge, it's either $200 or $400. I can't remember. They will put you through a credit analyzer, tell you exactly what to do, and into a program that if you go through it with them, they will give you a couple $1,000s in grant money to buy a house. So you give them $200 up front, they'll work with you to get your credit where it needs to be. And at the very end, you'll qualify for a couple $1,000s in free grant money. So one of the few times I'd say for paying for that type of stuff, because they're going to pull your credit, they're going to run it through a simulator, they're going to tell you exactly what to do, and they'll coach you every step of the way. So I would, I would definitely hit Guild Mortgage up for that. I've got a contact that does a great job there. His name is Steve Narden. So next thing, increase credit card limits. So if your credit utilization is high, let's say you have a $1,000 limit on your credit card and you owe $1,000, but you get them to increase that limit to $2,000. Now you're at a 50% utilization. If you got them to increase it to a $3,000 limit, you're at 33% utilization. So you didn't have to pay anything off. You just got them to lift your credits. Okay. So that's one workaround versus just paying down your balances. Now, I am finding right now people that pay down their credit card balances below 30% are getting a bigger lift than ever before. So if you have a credit card that's maxed out and you're able to pay it below 30%, I'm seeing people get 30 to 40 point bounce by doing that. Remember, don't pay it off, just pay it down as low as possible. Now, the other option is if you need to, ask a friend or family member if you can become an authorized user on one of their accounts. Make sure the account's in good standing and all that stuff. But it's not as difficult of an ask as you think it is. Okay. And the reason I say that is I've been there. So I've had to do all of this stuff. And I can tell you, 15, 20 years ago when I had to do it was a heck of a lot harder to do than it is now. So all of these things are kind of old school methods in many respects, but they're tried and true. So, but being an authorized user, you're not asking somebody for money. So if you're asking a friend or family member, the conversation goes more like this. Hey, John, I need some help. I can get approved for a down payment assistance or grant to buy a home for the family. They're telling me that I just don't have enough trade lines or enough credit showing up on my credit report. Is there any way you can add me to one of your credit cards? Your best one, the one with the lowest amount, longest history. So who wouldn't? I don't need money. I just need to be added to your account. I don't need a card. I don't need the card. I just need a little help. Most friends or family members, it's a quick phone call, 5-10 minutes, and they can add you to it. And then 30 days, it pops up on your credit. You get a nice lift in your credit scores from it, plus the trade line. Great way to do it. Just make sure you hammer home with people. I'm not, I don't need money. I just need that additional trade line. Okay. And, hey, after I get the mortgage, if you want to remove me from it, by all means, just go ahead and do it. Okay. So it only needs to be a temporary thing too. All right. So next one, open up a secured card or secured loan as soon as possible if you need to build your credit. We can also get alternative trade lines through, different added to your credit, rent, cell phones, car insurance, subscriptions. I'm going to go through a detailed list of that in just a moment too. So the next thing, set up payment arrangements. If you have any big collection accounts that might have to be paid off, don't do this until we talk. Okay. I feel like setting up payment arrangements has changed over the past 6 months. If you have a large account on there, don't set up payment arrangements until you talk with a professional, because you may not have to do it. The don'ts. What we don't want to do is we don't want to just blanketly apply for new credit. If you go out to Credit Karma and says, oh, you got an 80% chance of getting approved for these 4 cards, don't do it. Okay? They are going to just shotgun your information out there. You're going to have several inquiries on your credit. It's not worth it. Okay? And like I said earlier, don't blindly pay off your collections. Next one, don't blindly pay off your credit card balances. We talked about that a couple of times. And don't prematurely pay off any loans. And don't become an authorized user on a new account or account with any late payments. And do not employ any debt consolidation services. Debt consolidation services are not your friend. So just to give you a feel for what they typically do, they will go out to all your creditors and tell you, hey, John is in debt consolidation now. Please do not call him. Do not contact him. We will be sending you the money. He's going to start making payments to us, and we're going to counsel him. So what happens? I start sending all my payments to the debt consolidation company. And then what they do is they put that in their pocket. So all the money you send to the debt consolidation company, that's their profit for 6 months. They don't pay your collections or all of your creditors. And then after 6 months, just about when your creditors are sick of it and about to sue you, that's when the debt consolidation companies start dripping the money out to the creditors. Okay? Not a healthy situation. The reason is the creditors are going to report to the credit bureaus that you are in debt consolidation. That's the equivalent of being in a bankruptcy in creditors' eyes. So now you're in a bankruptcy without the bankruptcy court protection. So I just think it's a big mistake going down that road. If you were in that spot, a chapter 13 or importantly, a chapter 7 might be a better alternative. Okay. So now there are a couple of decent consolidation services out there that are nonprofits, but there's not many. All right. Next one. Credit building tools. Okay. Here's where we can start getting quick bounces in your score. Remember, credit utilization, great way to get a quick bounce in your score. The next thing is opening up. If you need credit, open up a secured card, Visa, MasterCard. Typically what that is, you give them $300 to $500. They send you a credit card with a $300 to $500 limit. It's important that you use it right away. It forces them to set those up. The quicker you use it, the quicker they're going to send that data to the credit bureaus, the quicker they're going to see your score bounce up. Typically 20, 30 points in 30 to 60 days. Try to make sure that you keep that balance upon reporting at 30% or lower, and make sure that you are not late on any of those payments. Next one, secured loans. These are incredible tools. Credit unions have these. If you need a referral for a credit union that offers these tools, this is great. Now, by the way, the secured loans, secured credit cards, they typically report this data to, if they're good, they're going to report it to all 3 credit bureaus. So when you set these up, make sure you're asking if they're reporting to all 3 credit bureaus. It's important. Secured loans. What they do, you give someone a $500 deposit, they're going to give you a loan for $500. They may charge a $25 fee to get it set up. But what's going to happen is these are offered mostly by credit unions. So you give them $525. They may charge the $25 fee, that's gone. So they take the $500, they put it in a savings account, lock it down, you can't touch it. It's going to show on your list of accounts that it's your money, but you can't pull it out. But then they're going to give you a loan for $500. So they're going to put $500 in your checking account. So it's going to look like you got $1,000 between the 2 accounts, but you can take the $500 out of the checking account, no problem. But you're gonna pay that loan off over 6 months typically. So $80-something a month gets paid off. Some of these credit unions, you can set these out for 2 years. But what's important about it is they report this information to the credit bureaus as a personal line of credit, one of the harder things to get. So that being the case, it bounces your scores more. I find that after 45 to 90 days, this can give you a 40 to 60 point lift in your credit scores. The downside is once you pay the loan off, it comes off your credit as a paid loan. So some people have to do it again if they don't get it done and if they don't buy something within 6 months. But these are great credit building tools. Next one, credit monitoring services. Sign up, Credit Hero, Experian. Personally, I like Experian and Credit Karma. Reason being, Experian obviously gives you the Experian credit data and credit score, and Credit Karma gives you the Equifax and TransUnion. Now, keep in mind, these guys use the Vantage scores, not the FICO score. So it's not the same scoring model, not the same algorithm. You could have a 670 on Credit Karma with their Vantage score, but your FICO scores could be totally different. Okay, so keep that in mind. The mortgage world, we want FICO. All right, next item. Credit restoration companies. Not a big fan of these. You can do this yourself now. I don't even hear these guys being advertised anymore. The big boy was Lexington Law, and then National Credit Care just got rebranded to another name because they got sued. But these companies are not your friends. Okay, they're okay for a month or two, but they're kind of they don't move at the pace that I typically like, and I find that they just tend on just. Once you sign up, they're not bashful about charging you every single month. And what you get for your money isn't as powerful as it used to be because we're so empowered with artificial intelligence right now. But if your scores are below, 540, 520, it's not a bad route to go for a 90-day period. Okay. So what they do is they take advantage of the Fair Credit Reporting Act, where you can write letters to the credit bureaus challenging the things on your credit report. So they write the letters for you, they send them in, but the credit bureaus are fighting back really hard on these right now. And sometimes they don't work. Okay. So I'm a big fan of doing it on your own. All right. Next items, alternative trade lines. So if you don't have any lines of credit, don't have anybody that can be an authorized user, chances are you probably have some alternative trade lines that we can add to your credit. We can get your rent added to your credit, auto insurance, PO box payments, storage units, cable bills, cell phone, renter's insurance, utility bills, monthly subscriptions, Netflix, gaming, gym memberships. I had a young man a couple of months ago living in his future mother-in-law's basement before they got married, and they wanted to buy a house. Didn't have a credit score. We added him and his fiance to mom's credit as an authorized user. Bam, next month they had a credit score. We need some trade lines. He had gaming memberships. I think it was PlayStation, Xbox, a couple of other online games. So we were able to show that these online gaming subscriptions came off his debit card every month, $9.95 for 12 months. We got his statements, send them into the third-party credit company, and they got it added to his credit report. So now we have those trade lines and good lines of credit on his credit report. We were able to get him approved for a down payment assistance program to purchase a home. So it can be done. It's a little bit more work, but it is out there. So most people have something that they're paying on. So with being an authorized users work about 90% of the time. 10% of the time they don't. Reason being, there are some, they basically came out, people have been using this method for years to game the system. But what happens is when you get added to a credit card, it's a manual entry on the phone. And so a lot of people are lazy. It does work 90% of the time. 10% of the time, if the person puts in that you're added to the account the day that person makes the phone call, your scores will go up. They just don't go up nearly as much because you don't have that old history. Like I said, a lot of the time when you're calling to get people added, there's a phone jockey on the other side, and those calls are timed. So 90% of the time, they just add you. They don't make that manual data entry with regards to the date. Okay, so that's why it works 90% of the time. And then the next item, where do we go from here? Well, I always tell people, schedule a call. I'd love to learn your situation, give you my advice on it. And if need be, we can connect you with a lender that can pull your credit and run you through some of the simulators. So, and if your budget permits it, heck, why not do the one with Guild where you give them a couple of $100 and they will run your credit, give you all the credit scores, put you through the simulators. And as long as you stick with the program for a few months, you actually get $2,000 grant for your closing costs. I mean, I think it was 2,500 if memory serves. I can't remember. I learned about it a couple of weeks ago. But what a great trade-off that is. So that coupled along with some of the down payment assistance programs, what a great way to tap into some free money that's out there. So now, if you happen to be catching this through, Facebook, YouTube, or one of the platforms that we stream to, always happy to pay it forward, helping people with their credit. But my main thing is I help connect people with different down payment assistance programs and grants. We have a website called Own the Roof, where there are all kinds of down payment assistance and grant programs out there. So I always tell people, stop renting, start owning with zero down using them. There's plenty of programs out there. If you want access to some of these programs, we actually have an application that is built for this called Zero Down Scout. You can actually access it through our website. Where is that? Resources, Zero Down Scout. Here you go. It's available on the Apple Store and Google Play Store, where you can actually download our application and see what programs are out there. Our database is over 3,000 down payment assistance programs and grants across the country. So if you look at our website, you can see there are no shortage of money out there. I want to say here, Miami, 200,000. Denver has 40. Austin, I think that Austin program is no longer there. Detroit's 30. Actually, there's a program in Detroit right now that's offering up to 75,000. Vegas 50, New York $260,000, Los Angeles 160, and Chicago 45. So all kinds of programs out there. You can just go to the website Zero Down Scout and find all the grant money that's out there. Okay, and that is zerodownscout.com. So it is 9:50. I always like to get done in about 50 minutes, so we are there just running through any questions before we wrap it up today. Okay. All right. If you ever want to attend one of my webinars, go to owntheroof.com. We do webinars at least 3 times a month. That's owntheroof.com. And you can go into resources. You'll see Zero Down webinar, and you'll see the credit repair webinars. The next ones that are for the Zero Down looks like July 1st, 7 p.m. So just go out to my website, register, and all the tools are out there. Anybody that wants to learn how we access these, the different programs, we have access to our books, our publications, where no down payment, no problem, no credit, no problem. We also have our webinars. Any of you that are collecting HCV, we actually are just launching an HCV program. We are becoming deeply invested in educating people on that side, where people can use their housing choice voucher to actually purchase a home. So very excited for that. A lot of people are being able to be helped there. And then I also have free digital courses. Any of you that want to learn on in front of a videos. So I have 6 hours of video for no down payment guide. I think 3 or 4 for the credit score. And then for those of you that want some of the advanced techniques on how we get people in with very little money out of pocket, how to structure deals with little money out of pocket, it's about 2 hours. But that's a high level course teaching people the tricks that tricks and tools and things that we discuss with the lenders to actually get the lenders to pay some of your closing costs through lender credits. So kind of an advanced maneuver, but there's no shortage of ways to help people get into homes with very little money out of pocket. So approaching the top of the hour. Thank you all very much for attending today. Hope our paths cross again soon. Enjoy your weekend, everyone. Take care. Goodbye.